Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine.
Hello everyone, I'm Troy Moling and thank you for joining us today on Market Journal. Really good information for you on the show today, but before we get started, I do want to mention as United States and global health officials continue to address the spread of COVID-19, UNL is also monitoring the situation. Updates can be found at covid19.unl.edu and on the Market Journal website. And beginning the broadcast today, in the era of COVID-19, it's become abundantly clear that the certainties of any other planting season are anything but certain, and this is not going to be just another average year for many farmers. With that in mind, Nebraska Extension Agricultural Economics educator Robert Tigner has offered some suggestions as to how to make your marketing strategy better suited to these uncertain times. Market Journal's Bill Dodd has more.
Late in 2019, demand for oil began to decline as many countries began closing borders and doing away with non-essential travel. As more and more cases of COVID-19 were reported, more and more people around the world started staying home and off the road. This decline in oil consumption has been a prevalent facet in the recent downward trends of the global economy and has since cascaded into the agricultural economy as well. As oil prices dwindle and farmers around the Corn Belt are hitting the most opportune planting dates, pressure mounts on the prices of many agricultural commodities.
Boy, did we have a big decline in oil prices. It's probably going to take a while before those recover. And until they recover, we're not going to see much likelihood of corn prices and soybean prices making any significant recovery too. I was looking at the planting progress reports that were released. And so far in the United States, we have planted something like under 70% of corn in the United States. And if we look at Nebraska corn, it is about 80% planted. Iowa is virtually all planted. Illinois is about on average, and Minnesota is 90% planted for corn. So they've hit the optimal planting time frames. So they've set themselves up for a very large crop, possibility of a very large crop, and that will impact corn prices certainly.
With planting on track, projected crops could outpace our actual production history. If that were to happen, a greater downward pressure could be created on grain prices. In any normal year, you may get by on lower prices and a better than average yield, but this isn't a normal year, and for some, 2020 will be a year of marketing survival.
Yeah, it appears that this year is going to be a survival year because there's a lot of possibility that grain farmers will lose a significant amount of money. So what I'm suggesting is that the best outcome for them is that they recapture all the cash costs that they have and plan for that outcome. So that depends upon yields and prices, and those are the great unknowns. And right now at the front end of our growing season, there's a lot of variability that can occur because of weather events that happen across Nebraska, and especially in Iowa, Illinois, and Minnesota, who are larger corn and soybean producers than our state is. So I'm saying that this year is probably one of those years where farmers need to plan that they're going to lose money, but to minimize those losses as much as possible, and do that in a very stepwise and consistent fashion.
When making your marketing plan, there are several factors to take into account. According to Robert, the first thing you should establish is your cash flow price, though this may not be the most opportune time to calculate that particular figure.
Now, that's a difficult thing right now to calculate because we don't know what yields are going to be. Farmers do know what their cash flow output will be for corn and soybean production. We know what our expenses are going to be. We know what our cash outlays are. And what I suggest people use is their APH as the average to calculate a cash flow price per bushel. You calculate a yield better than APH, and you calculate yields lower than APH2, because we don't know yet how the growing season is going to proceed. And if we do have lower than APH yields, actual production history yields, then we're going to have an issue if our cash flow is highly diminished.
Furthermore, at this point in the year, many producers have already paid many of their expenses for the growing season. However, Robert tells me there are other expenditures that could be given a second look.
So there's not a lot that they can do to change their costs. What they do want to review, though, is what the optimum nitrogen rate will be and whether or not they want to put on additional water. There's a cost to that water. That last half inch of water may not bring back as much revenue as they had hoped for. Okay, that's the first part of that plan. The second part of that plan is to understand what your costs are and establish pricing parameters around those costs. Above those costs, those cash flow costs, and set those in a stepwise fashion upwards. The second thing in a written plan is to commit to date, make sales, don't miss opportunities. We had a lot of opportunity well, it was a short window of opportunity, but we had an opportunity to sell significantly higher priced corn around May, June last year, 2019, than we did at harvest time. Committing to making sales during that usual May, June time period is important for this year so that people don't miss out on those opportunities to make higher cash flow into their operation than they would have otherwise. If the scenario plays out that yields are very, very good, we're not going to likely have better opportunities to make sales, corn sales, soybean sales at any other time than May and June, maybe early part of July.
In short, it would be best for producers to know what crop price they will need to reclaim all of the cash they have and will spend this year. Putting a marketing plan into action can help ensure that the operation will stay strong enough with no further debt and a brighter future in the coming seasons. Reporting from Market Journal, I'm Bill Dodd.
Thanks, Bill. We've got more on grain marketing and COVID-19 on the Market Journal website. Let's get a check on what else is happening in the markets now. There's so much to discuss, and I was joined by Tredas' Doug Simon on Wednesday to talk grains and the latest WASDE report. Those are just a couple things, though. We started by talking about what continues to make news in the cattle markets.
Because we've got these bigger packing plants, we've got this kind of bottleneck where you got, basically all this, beef and poultry and trying to make it through these packing plants that are highly dependent on people, showing up. And we've got a, big, that fire that we had last year in September down in Kansas showed how fragile the meat packing industry, because we're running like 98% of capacity. Well, this has shown us how fragile we are in another aspect of it, because you can't robotize meat packing. You can robotize like pallet plants or auto manufacturing plants. So it showed us how sensitive we are. The good news is that the pork plants have come back on. They're still running slow. Obviously, Nebraska cases of coronavirus have been increasing, unfortunately. We're definitely running things at a much slower pace, but we definitely need to figure out where we're fragile and what we need to get over that and be better. And I think this whole thing is definitely showing us where our weaknesses are, but a lot of things we can do to get better there.
Oh, yeah. And want to get into the WASDE report as well that came out this week. First off, the changes in ethanol production continue to make news. What are we seeing in terms of demand there?
Well, the big deal, production-wise, they kept the acres the same as the March report, which we knew they were going to do that. And the yields are using kind of a normal type of weather yield on that. So the big question would be, I think, demand, like you said. Ethanol side of it, today we had, reports. I mean, our actual ethanol stocks are down about 10% from where they were here just, in the last week or two. That's encouraging. Ethanol margins have actually, we were losing maybe $1 a gallon, earlier. Now we're maybe losing 30 cents, which is kind of on par with where margins were last year. So, USDA in some regards, with the lack of driving and the use of, oil, we've actually, yesterday in their report, they didn't drop ethanol as much as maybe some of the other industry analysts had expected. And they actually increased the feed side of it, and they actually increased the exports a little bit. And as poor as exports are, kind of surprised they increased that demand side on that. And they weren't maybe as aggressive, cutting, feed use as what they could have been. So all in all, that report yesterday, our carryout was, close to 2 billion. People were expecting it to be about 2.2 billion for this, crop that's everybody's marketing right now. So those numbers weren't nearly as negative as what they thought. And then that all carried into next year. Instead of being the 3.4 or 3.5 billion bushel carryover for next year on corn, we came in at about 3.2. So those numbers were about 100 million bushels less than what the guess was. So all in all, corn had a fairly decent day. Didn't have nearly a negative number there is what it could have been.
And you also mentioned feed demand. Anything else you're tracking on that front?
One of the earlier market journals we did, I talked about how low the feed use they had, and they actually came back and adjusted that in the last couple of WASDEs and boosted up feed demand. But they have those numbers for this year at 5.7 billion bushels of feed demand, which is good. They've actually got that growing to about 6 billion for next year. So they do have a pretty aggressive increase in feed use on the corn side, which is important. And on the export side, they do have that actually growing by almost 300 million bushels as well. So they've got, even though they got big production numbers, they got pretty, I think, decent increase in demand, given the bigger production we're going to have for next year.
And let's switch gears to soybeans for a second. We had a story on the show last week about some ways that cattle producers can feed their animals since we've got a lower supply of distillers grains due to the less ethanol demand. So would soybeans be an alternative feed option, and what market impacts would that have?
I've had quite a few cattle guys that have been looking for alternative sources to the DDGs. Valera has a sweet brand product, and given the fact that they're continuing to produce ethanol up there and other co-products, they've been able to keep providing their sweet brand. But like ADM, with them slowing down their synergy products, a lot of other producers have been looking for alternative protein, whether it's soy meal or urea. They've been looking around doing different things in the rations. But there's a limit to that. I mean, one packer or one farm or one feedlot said that they basically haven't used soy meal for 30 years. I had to think back to that. You had the big growth in ethanol back, starting in 2014 or 2004 and 2005, some of these dry mills. But actually, Valera and Columbus have been around for 30 years. So some of these guys haven't used soy meal for a long, long time. So it's interesting to see.
And finally, Doug, anything that you'd like to mention that we didn't talk about today as far as maybe advice when it comes to making sales, risk management, anything else?
Well, I think one of the things we talked about too a little bit in the past was the ARC County or the PLC program. Mm-hmm. And when we've spent a lot of time with our farmers going through those PLC bases and those PLC production or the PLC yields, try to figure out what their PLC production is you're going to get a payment on 85% of that production. And it's actually pretty substantial. It's essentially a 370 cash price or 382 if you use some of the NAS numbers and look at what the future price would be, and about 880 on the futures on the beans, or about 840 cash price. So you have a free put from the government. It's different than the old LDP days where you used to take it at harvest. Now you have to look at the forthcoming marketing year. So trying to put that into play, there's some real practical aspects that we've been working with our farmers on to help them understand that, but understanding what that support is.
Next week, we'll be joined by Josh Maples of Mississippi State University. Moving on now, and after graduating from the University of California, Santa Barbara with a degree in economics in 2006, Logan Probino worked for a firm in the San Francisco Bay Area for 5 years. He was doing financial consulting, accounting, tax prep, and IPO consulting. However, he knew he would one day return to the ranch that's been in his family for 4 generations. So in 2012, that's what he did, along with his wife, Brianna. They returned to the ranch near Imperial, where he joined his dad, Jeff, in managing the ranch. Since then, he's introduced new practices like grazing annual forages. Read about the family's ranching operation and grazing management practices in the May Nebraska Farmer. Time now for weather with Nebraska Extension Ag Climatologist and Market Journal Chief Meteorologist Al Dutcher. Welcome back, Al. We missed you last week. What's the big story in the forecast that we've got going?
Well, Troy, it has been a very dry period over the last couple of weeks. Temperatures have been a little bit more brutal, and of course, it slowed down some of the planting, but we're still way ahead of normal. And compared to last year, we're almost double on our soybeans ahead of normal, and in terms of corn, well over 70% complete. And that's a big jump from last year's 43%, 60% average. So overall, what is it going to look like for weather going forward? Well, let's go take a look at the weather maps. Today's upper air pattern features a small upper air low over the northern plains and a large trough entering the western United States with some ridging occurring across the southeastern United States. Low pressure sets up over northwestern portions of Missouri and down in deep southwestern Texas. This is going to allow a little bit of moisture to feed northward, generating showers and thunderstorm activity during the day hours, gradually easing as we go through the overnight hours as that low begins to head to the southeast from the northern plains into the Ohio River Valley. That'll promote some clearing skies behind it, also start to increase the ridging aloft. So high pressure moves in for Sunday, a very nice day as we move back into the 70s with the heavier precipitation in the central eastern Corn Belt. And we see that ridge even building farther on Monday. Big trough in the western United States with the surface low development in southeastern Colorado generates a little bit of precipitation across the northern Rockies. And we might actually see some isolated thunderstorm activity in the southwestern high plains region, but we still see that thunderstorm activity over the eastern Corn Belt. Upper air low stays in position in the southeast. The trough comes a little bit closer to us on Tuesday, but high pressure firmly in control of the central plains. Low pressure stacks up over the central Rockies, and that's where we'll see the majority of the precipitation generated during this period as it slowly moves toward the east. On Wednesday, we start to see that trough intensifying over the northern Rockies, and energy will rotate around it. The first piece of energy will bring a surface low into western portions of Kansas as we go into Wednesday morning, and we'll start to see some thunderstorm development there, but the most concentrated area, again, will be across the northern Rockies and western North Dakota. Until Thursday, that upper air low moves into a position in northeastern portions of Montana. Another surface low develops down into southwestern Kansas. That may allow enough moisture to feed northward to generate some showers, scattered showers, and thunderstorm activity over central and portions of southeast Nebraska on Thursday. But more importantly, as we go into Friday, we start to see that wave open up somewhat coming across the central plains with low pressure over central portions of Kansas. That should be enough lift to start to generate some pretty significant thunderstorm activity over the central part of the state. And that will shift eastward during the day. And more importantly, it does look like an active pattern is starting to begin as we see more troughing in the western United States. More importantly, that trough in the western United States will remain in place through next weekend. We see most of the warmth in the eastern United States, cooler in the central and eastern Rockies. And more importantly, that means that with that trough to the west, we increase our precipitation chances with the vast majority of the central United States in above normal tendencies for precipitation. And even a more active pattern looks like it's going to be in shape as we remain for the remainder of the month. So, Troy, overall, we do have a couple shots of precipitation, warmer temperatures ahead, and a very stormy pattern that will end the month. So, favorable conditions going forward.
Thanks, Al. As Al just mentioned, pretty favorable weather has allowed many farmers across Nebraska to get their planting completed. And part of your pre-planting regimen likely involved fertilizer nitrogen applications. But there might be some reasons to shift to a more in-season application. Extension Nutrient Management and Water Quality Specialist Javed Iqbal joined me this week to talk about it and give some tools to help you make your best informed decisions.
There are no set numbers for in-season versus pre-plant nitrogen application. However, if enough resources and equipment are available, we encourage that most of the recommended nitrogen be applied in season, especially before the crop rapidly starts to take up the nitrogen around V8 to V10 growth stage. So generally speaking, about 30 to 40% of the nitrogen can be applied as pre-plant, while the rest can be applied in season.
Let's move on to the late spring soil nitrate test. If you could explain how this can help producers with their nitrogen application decisions.
So there are many tools available that can help you to estimate and quantify the in-season nitrogen application. Late spring soil nitrate test is one of the tools where soil nitrate sampling is done in late spring to check the crop nitrogen availability. You can use this tool by collecting soil samples from 0 to 12 inches soil depth. When the corn is 6 to 12 inches tall, you can send that sample to soil testing lab and get results on soil nitrate, nitrogen, and then you can compare these nitrogen values to the critical values those are used in this tool. And then this would help you to decide if you need to apply any nitrogen in season or how much nitrogen you need to apply in season.
And another important tool is remote sensing, also helpful for in-season nitrogen application. Explain to us how that works.
So remote sensing is actually one of the best options for estimating in-season nitrogen application. This canopy sensing technology actually uses crop canopy sensors. Those can be placed over the crop and can give you a status on crop nitrogen status. So when the healthy plants, they are scanned, the healthy plants will reflect light in a different way than the stressed plants. The plants that are under stress are less than the optimal conditions. For example, Newton deficiencies will go through physiological changes, which will result in different spectral signatures. For example, stressed plants, they may read less infrared and more red edge than the healthy plants. So these differences would result into a greenness values, and crop canopy sensors can detect that greenness values, which can be translated through algorithm into the crop nitrogen needs. And then this approach actually is more reactive approach. And then this has the potential for maximizing nitrogen use efficiency while minimizing the nitrogen losses. Farmers, they can also use less nitrogen fertilizer for plants. Those are already getting enough nitrogen supply from the soil. So they can not only reduce the fertilizer amounts, but they can also reduce the nitrogen losses.
We've posted more information and additional resources on this story on the Market Journal website. Finally today, another casualty of the pandemic has been farmers markets. And there are lots of them throughout Nebraska where consumers can buy directly from the source. Market Journal's Maddie McIntosh spoke with Skylar Falter of Nebraska's Buy Fresh, Buy Local program to find out more.
To many people, supporting local farms and buying fresh produce is highly desired. The Buy Fresh, Buy Local program helps connect buyers with growers across the state in an effort to bring the farm a little closer to the table.
Yeah, so Buy Fresh, Buy Local is actually a national program, and Nebraska is just one chapter of that. So Buy Fresh, Buy Local Nebraska is a member-based education, promotion, and marketing program. We are the only kind of statewide marketing program for local foods and farms in the state. So we are here to, connect eaters with the good food that's being grown on Nebraska soil.
Going on for more than 10 years now, the Nebraska chapter was started by farmers for farmers.
Yeah, the program started around 2005. There was a group of farmers. I know Common Good Farm, Ruth Chantry was one of the first lead folks to get this going. Elaine Cranford at UNL and also some other growers just decided, hey, we need to help promote farmers markets and we need to help people find a way to find local foods, because there are more large supermarkets now and there's more people that aren't shopping locally or also don't have access to land anymore. And so they are losing that connection to agriculture in our state.
The program provides the opportunity for producers to sell in multiple places while still staying local.
our members sell through a lot of different avenues. There's grocery stores, there's farmers markets, there's on-farm stores, community-supported agriculture, which is like veggie boxes every week. We also have members that sell through local aggregators like Lone Tree Foods and Nebraska Food Cooperative. So these are folks that are distributors that buy a large quantity and then sell that produce to wholesalers like Hy-Vee and other larger restaurants and that kind of thing across the state.
Currently, the Nebraska chapter has about 100 members. The program is available for farmers who sell regionally.
Yeah, so any producer can join that is selling to direct markets or regionally, if that makes sense. So, people that are growing like corn and soybeans, like row crop farming, typically aren't members because they're selling to like international markets. They're selling to the elevator in their town. So we are any producer, doesn't matter your growing practices are big or small or where you're located in the state, any producer that's selling direct to a Nebraska resident can join. Yeah, you can join by going online. Our website is buylocalnebraska.org, and there is a link there to learn more about membership and how you can join and kind of what the benefits are of our program.
Skylar believes the program is important because it allows produce grown in Nebraska to stay in Nebraska, as well as educates the public on where their food comes from.
Right now, less than 10% of the food we eat in our state is grown in our state. And so there really is a huge need for us to increase food security and increase access to local foods. And that includes, folks going out and shopping more and buying more locally, but it also means having us kind of build that network so people know where to find local foods. And that's really one of the big areas that our program brings value to producers.
Reporting for Market Journal, I'm Maddie McIntosh.
Skylar says members also get a page on the website dedicated to their farm. If you're interested in joining the program, we put a link to the Buy Fresh, Buy Local site on the Market Journal website. That's going to do it for this week's show. Don't forget, you can get the latest updates on the coronavirus outbreak at covid19.unl.edu. We hope to see you right back here next time. I'm Troy Moling. Thanks for watching.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.